Good day, everyone. Today, I will present to you the chapter 4, which tackles about the revenues and other receipts. But before discussing this chapter, I will first present to you the learning objectives. First, state the sources of revenue of a government entity. Second, state the recognition and measurement of the revenue. Now, since we already know the objectives, we will now proceed to our topic, which is the revenue and receipts. So, what is revenue? Revenue are receivable. So, it can be seen in the income statement, specifically in income. What is receipts? So, receipts is the actual collection during period and can be seen in the cash flow or cash inflow. Fundamentals principles of revenue. First one means that once a government agency collect revenue, it should be remitted to the Bureau of Treasury. Next one means that it should be accounted for government funds or government property. Example, kung para sa government property, diha ra jud na siya. The next one means that account separately in accordance with a purpose. The next one means that all collection should accrue in general fund exception unless exempted authorized by law. Next one means that don't pay any government agency without receipt cause it can cause corruption or we called it a paper trail. The next one means that COA use accountable forms and it should be complete and with a serial number as given by the National Printing Agency. Next principles means that temporary receipts shall never be used to acknowledge the receipt of public funds. So, dili pwede mo issue og temporary receipts. The next principle means that numbers should be the same as the 3 copies issued for original payer, COA copy for audit purpose, and the management. The next principle means that complete details is required and dapat makita kung kinsay payee sa checks. And the last one is collecting officer should collect an audit but BIR should acknowledge receipt as it was remitted early. Types of funds. There are general fund, special fund, trust fund, revenue fund, depository fund, special account in the general fund or SAGF, and the last one is special purpose funds or SPFs. Sources of revenue. So this means that the value of the consideration and the value of asset or services in exchange of the consideration is of equal value is called equal transaction. So if nag-render kag service or for example, nagbaligya akong product and you pay for the product, that is an exchange transaction. The next source of revenue is the non-exchange transaction. The example for this is you receive land but you don't pay for it and you get service pero wala kay gibayad. That's the example of non-exchange transaction. Exchange transactions. So revenues from exchange transactions arise from the following. First is sale of goods or provision of services to third parties or other government entities. Examples are service income and business income. So in service income, there's permit fees, registration fees, franchising fees, licensing fees, legal fees, passport and visa fees, and the like. In business income, there's school fees, examination fees, rent or lease income, communication network fees, income from hotels or dormitories, sales revenue, hospital fees, share in profit of joint venture, and the like. Second is used by other entity of asset yielding interest, royalties, and dividends or similar distributions. The examples for this are interest income, royalties, and dividends. Recognition of revenue from exchange transactions. In sales of goods, the revenue is recognized when all of the following conditions are satisfied. A significant risk and rewards of ownership of the goods are transferred to the buyer. B. The entity does not retain continuing managerial involvement or effective control over the goods sold. C. It is probable that economic benefits will flow to the entity. D. The revenue can be measured reliably, and E. Costs relating to the transaction can be measured reliably. Rendering services. Revenue from rendering services is recognized as straight-line basis over the contract term. However, revenue is recognized by reference to the stage of completion if the outcome of the transaction can be estimated reliably, such as when of the following conditions are satisfied. A. The stage of completion can be measured reliably. B. It is probable that economic benefit will flow to the entity. C. The revenue can be measured reliably. And D. Costs relating to the transaction can be measured reliably. So there's interest, royalties, and dividends. So interest is recognized on a time proportion basis that takes into account the effective yield on the asset. Royalties is recognized as they are earned in accordance with the substance of the relevant agreement, and the last one is dividends are recognized when the entity's right to receive payment is established. Measurement of revenue from exchange transactions. Revenue from exchange transactions are measured at the fair value of the consideration received or receivable. Any trade discounts and volume rebates shall be taken into account. So as you can see, there's an example. So when cash flows are deferred, the fair value of consideration is the present value of the consideration receivable. Exchange of goods and services. So there are two, similar and dissimilar. Similar has no revenue recognized, and dissimilar has revenue recognized and measured using the following order of priority. First, fair value of the goods or services received adjusted by the amount of any cash transferred. Second, fair value of the goods or services given up adjusted by the amount of any cash transferred. Non-exchange transactions. So tax revenue is recognized at a gross amount and not reduced for expenses paid through the tax system. Type of tax and taxable amount. So income tax is earning of taxable income. Value-added tax, undertaking of a taxable activity. Goods and services tax, purchase or sale of taxable goods or services. Customs duty, movement of dutiable goods or services across the customs boundaries. Debt duty, debt of the owner of the taxable property, and the last one is the property tax, which is the passage of time period for which the tax is levied. Fines and penalties. It is recognized as income in the year they are collected. So in gifts, donations, and goods in kinds, it is recognized as revenue when it is probable that future economic benefit or services potential will flow to the entity. So other example of non-exchange transactions, service in kind, debt forgiveness, bequest, grant with conditions, pledges, and consensory loans. So in service in kind, it is not recognized as revenue. Why? Because an example for this is a volunteer service in schools like teachers and volunteer doctors. We don't recognize this as revenue, but this is encourages us through present. Measurement. So there's an asset, liabilities, and revenue. So asset measured at the acquisition date fair value. Liabilities measured at the present value when the effect of time value of money is material. So revenue is measured at the amount of increase in net asset. Debt forgiveness. So debt forgiveness example is a teacher who's still not paying his or her loans, so from liability to revenue, it will be recognized as carrying amount of debt forgiven, amount of revenue. Next one is bequest. Example for this is a deceased person has many properties but don't have any heir, so all of his or her properties will be turned over to the government, so it will be recorded as fair value of the asset received. Next is grant condition. So it is a property that will be given to someone or a properties will be donated and accepted with a condition to be fulfilled, which is recognized as liability and will be revenue if the condition is satisfied. Pledges. It is not recognized as revenue because they do not meet the recognition of criteria for asset at present. The entity has not yet obtained control over the item pledge, so item pledge is subsequently transferred to the recipient entity and it is recognized as a gift or donation. Concessionary loans. So, it is an entity considers whether the differences between the transaction price or loans proceeds and the fair value of the loan on initial recognition is a non-exchange transaction. If it is so, the difference is recognized as revenue, except if a present obligation exists, in which case the differences is recognized as a liability and recognized as revenue only when the obligation is satisfied. Impairment losses and allowance for impairment losses. So it is an entities that encounter impairment losses, they should manage it properly by having an allowance for impairment losses. They should evaluate the collectability of accounts receivable on an ongoing basis based on historical bad debts, customer or recipient credit worthiness, current economic trends, and changes in payment activity. Other receipts. So, A. Receipts of subsidy from the national government. A subsidy from a national government is usually in the form of cash payment, which is a direct or indirect payment to individuals or firms. Example receipt under these kinds of subsidy are notice of cash allocation, cash authority issued by the DBM to central, regional, and provincial offices and operating units through the authorized government servicing banks of the MDS to cover the cash requirements of the agency. Next, tax remittance advice is a countable document issued by the NGA and approved by the agency head to record the remittance of all taxes withheld to the BIR. The same document shall be the basis of the BIR and BTR to draw a GAV to record the tax collection and deposit in their respective books of account. Non-cash availment authority is an authority granted by the DBM to government agency to account for the cash equivalent of loan proceeds availed of through supplier's credit or constructive cash. As you can see in the illustration, it has a lending institution directly pays the supplier because there is no cash involved in the acquisition of the equipment, settlement of the accounts payable, and recognition of the loans payable. Cash disbursement ceiling. So it is an authority issued by the DBM to department with overseas operating DFA and DOLE to utilize their income collected or retained by their foreign service post or FSPs to cover its operating requirements but not to exceed the release allotment to the said post. B. Receipt of subsidy or assistance from other government agencies including LGUs and GOCC. We need to debit cash which are being collected by the collecting officers, which is responsible for managing the collection of outstanding debts from clients and customers. They are hired by the businesses and collection agencies to inform customers of their overdue bills and attempt to collect payment to mitigate company losses. On the other hand, we need to credit the accounts involved in the different subsidies or assistance came from other government agencies such as LGUs and GOCC. The next journal entries is with debit cash from Treasury Agency deposit, which is an account to be used to recognize the amount of collection remitted to BTR under the general fund in the agency books, and credit cash from the collecting officers again. C. Receipt of excess cash advance granted to officers and employee. Example is receipt of excess cash advance for travel. Letter D. Receipt of refund overpayment of expenses. So in here, we debit cash from the collecting officers and credit the appropriate expenses account, which are important to be recognized because this can keep track of the different expenses, especially the overpayment of expenses which is being refunded to avoid overstatement and understatement of expenses. In the second journal entry, we debit cash from the treasury and credit cash from the collecting officer, which is important to recognize the remittance of collection to BTR, wherein the BTR stands for Bureau of Treasury, which is responsible for ensuring the sufficiency of government financial resources, including the active management and investment of excess funds. E. Receipt of performance bond or security deposit. So in the sample journal, we debit cash which is from the collecting officers and credit guarantee or security deposit payable because in accounting, the entity paying the security deposit would credit the asset account cash and would debit the asset account security deposits. The receiving side of the security deposit would debit the asset account cash and would credit the liability account security deposits. On the other hand, on the second journal entry, we have a cash from the treasury which is being debited and the cash from the collecting officers which is being credited. F. Collections made on behalf of another entity. So upon receipt of remittance, the recipient entity records the collection as a credit to the trust liabilities account. G. Intra-agency and inter-agency fund transfers. So it involves in the transfer within the same agency and transfer between different agency. So inter-agency fund transfer with the same agency. The sample journal is in here the cash or money transferred or sub-allotted by the agency to which the allotment was originally released in favor of another agency which will implement the project. And that is the end of our presentation. Thank you for listening.